today SBI came up with its numbers, very complex set of relationship between how the stock is performing and how the numbers turned out to be.
Yes, Shweta. So SBI reported a healthy profit figures for the quarter ended June. However, weak loan growth disappointed the street, and as a result, the stock tumbled almost 3% in today's session and was a top loser in today. Now, if we can have the numbers of SBI up on the screen. So SBI posted, yeah, there we go. SBI beat the street's expectations of about a 150% rise in net profits, and it posted a 178% rise at about 16,884 crore. Although the profit figure, the PAT figure, was aided by non-recurring treasury gains of about 3,047 crore. So if we remove that number, it is largely in line with what the street was expecting from SBI. At the same time, if you are talking about what the good part of the result was, the gross asset quality continues to improve. Now the gross non-performing asset ratio continued to decline, and it declined by over 1% to 2.76% in this quarter compared to 3.91% in the year ago quarter. Now at the same time, net non-performing asset ratio has also moderated by about 29 basis points from 1% in the year ago period to about 0.71% now. Now let's talk about what was not so good and what led to the crash on the street. Now, net interest income, which is essentially the difference between interest earned and interest paid, was below the street expectations, and it came in at about 24.71% compared to the expectation of about 26.7%. Now net interest margin was up 31 basis points at 3.33% in Q1 FY24 versus 3.22% in Q1 FY23. However, on a quarter-on-quarter basis, it declined by 37 basis points, which, Shweta, is the highest quarterly sequential decline in nearly 6 years. Loan growth was another big concern, as loan growth was just about 1.05% on a quarter-on-quarter basis, which was the weakest loan growth in 7 quarters, and it was well below the industry standard. I think that is that's the reason why the investors decided to book profits, and as a result, the stock tumbled about 3% in today's session.
All right, I'm not sure if Avinash is with us at this point in time. Can we know if Avinash is joined back? Okay, Avinash is not with us at the moment. So a stock tumbling there by as much as 3% on the back of the fact that it's sort of a mixed bag for SBI, come to think of it. Gross NPAs are on decline, asset quality is increasing. Markets perhaps not, and investors perhaps not very happy with the fact that the revenue has declined, solely on the back of the fact that the interest that bank SBI is paying out is way higher, from what I understand, as opposed to the interest that they are earning, all of which due to a high interest rate regime.
Yes, Shweta. So if you also see, the profit beat was, 3,800 came from non-recurring treasury gains. So it was a one-time profit. If you remove that effect, it is actually below the street's expectation of about a 15,000 crore rise in net profits. And when we are talking about, like, the asset quality has certainly improved, but that has been the cases with all the private sector banks and the public sector banks. But one of the most concerning things about SBI's quarterly performance was its weak loan growth, and it fell to a 7-quarter low in this particular quarter, in the June quarter.
All right, Avinash is back with us. Avinash, how are you reading these results for SBI particularly? Yes.
Little bit of disappointment on the loan growth, which I know your colleague mentioned, and plus I think the markets were little concerned about the fact that the balance sheet is yet not, as good as what the market expected. If you look at the other PSU banks like Canara Bank, or typically the smaller banks like Central Bank, the slippages number was also limited, plus the loan book growth was in fact more robust. What was more positive for SBI in this quarter was the increase in the profitability, but this profitability has been largely driven by the other income factor. Now, this is something which the markets were not very happy about. Core profitability has been more or less, grown at a very steady pace. And I think the markets were expecting a market leader like SBI to deliver very strong numbers on the operating metric front, which did not happen. So I think net a little disappointing number, But I think we'll have to wait for the management commentary post the results and what kind of outlook the management shares for the second half or for the third quarter of this financial year. I believe that at around 550, 560 odd levels, if the stock corrects sharply, I think it would be a good opportunity to accumulate it, because we believe that SBI is a story which is a story on the manufacturing sector and on the economy in general. And I think any uptick on the macro numbers side will obviously be capitalized by a bank like SBI. So typically on a standalone basis, the core business has disappointed, but I would believe that we need to look at the management commentary and then take a call. At the current level, I wouldn't suggest a sell, but at the same time, a fresh buy could happen only once we get to hear the management commentary and take a fresh review.
All right, so analysts, of course, waiting for management
Wait and
commentary,
watch.
wait and watch as far as SBI is concerned.